Does that make it a safer investment, or at least recommendation from financial advisors, that sort of regulatory clarity that you're talking about, or maybe even just more certainty in DC? Talk about what that might mean, at least, for Bitcoin and other cryptocurrencies as an investment.
So let's start with Bitcoin. The fact that the government approved an ETF, that Larry Fink, the largest asset manager in the world, is out there saying this should be part of every portfolio, this is digital gold. As long as the government keeps spending recklessly, Bitcoin should go higher. You can't get much more institutional than that. We're partnered with Invesco in an ETF, both in Bitcoin, and now it looks like the Ethereum ETF is going to get approved this week, maybe as early as tomorrow. And so for the two biggest products to have the stamp of approval from the U.S., at one point, what are you scared of? You've got the richest person in Massachusetts, Abby Johnson, who's been a huge crypto fan and a big advocate. The richest person in Pennsylvania, Jeff Yost, big crypto fan. You can go around, Stan Druckenmiller, Ray Dalio. Some of the best investors in the world recognize that Bitcoin's an asset that should go higher. And so I just keep asking the question, what are you scared of?
Yeah, Abby Johnson has been sort of an under-the-radar Bitcoin bull. But now that you're talking about the stamp of approval, if that is the case, what is the appropriate allocation for somebody who's not entirely in on crypto? They're looking to put a certain percentage of their portfolio or their clients' money. How should people think about this?
Listen, 2 to 5%. Think about what you do in a great stock, right? What's your allocation to Apple or Google or Microsoft? Often it's at least that high. And so I would say 2 to 5%, in the whole space. And you can start smaller. You can start with 1%. What I've learned talking to people about this since 2013, I literally am the oldest guy in crypto, and I've been doing this for 11 years, is get off zero. Once you get off zero, once you have a little bit of an allocation, you start following the story. Like, we invest in things that we understand. And so things that look complicated, we often stay away from. You learn about things by putting a little money on the line. Then you pay attention to the article. You pay attention to the interview. And so if there's one message I'd send to all the investment advisors and all their clients is get off zero.
I wonder what you make of the wealth transfer. You've got a lot of money in the hands of baby boomers that in the next decade or so, multiple decades, will transfer to a new generation. Does that set up Bitcoin and cryptocurrencies for more upside if this?
It's a huge deal.
Yeah.
When Charlie Munger passed away, I had typed up a cheeky tweet and I said, you can't do it. Charlie Munger's a legend. But Charlie Munger hated Bitcoin. Never understood it. Never took the time to want to understand it. He didn't have to. He was 95 years old and he'd made billions of dollars doing what he did. And so he didn't have the intellectual curiosity to dig deep and try to understand it. That money, I'm sure some of it went to, family members and that were much younger. Those guys love crypto. They love Bitcoin. They don't love gold, right? Even meme stocks. Older people I can't believe these Dogecoin. What a waste of time. You talk to a 25-year-old and they see it differently. And so the overall space, having digital assets, feeling comfortable in a digital world is just so much more enthusiastic the younger you get. And so we're going to see the largest transfer of wealth in the history of the world from gray hair to youth, and that's going to be great for crypto.